What if the most important letter you ever received looked like junk mail? In the summer of 2023, a thin envelope arrived from your bank. It was probably buried in a stack of credit card offers and takeout menus. Most people glanced at it, saw the familiar bank logo, and tossed it straight into the recycling bin, assuming it was just another tedious update to their privacy policy. But that letter wasn't just an update. It was an announcement that the fundamental nature of your money had been secretly and permanently altered. Without a public debate, without a vote, and without your explicit permission, the American banking system underwent its most significant overhaul in over 50 years. And the banks, along with the Federal Reserve, designed the announcement to be as boring and forgettable as possible, ensuring almost no one would notice until it was far too late. The letter itself was a masterpiece of misdirection. For customers of banks like Webster Bank, who received theirs around July 24, 2023, the message was overwhelmingly cheerful. It promised exciting updates and spent most of its ink reassuring you about all the things that wouldn't change. Your account number? The same. Your direct deposits? Uninterrupted. Your debit card? Working perfectly. They even touted enhanced access to over 40,000 ATMs through something called the MoneyPass network. It was all designed to sound like a simple, convenient service upgrade. But the real story wasn't in the big, friendly font. It was hidden deep within the dense, legalistic disclosure documents attached, the part nobody ever reads. Buried in that fine print was a single, revolutionary change. Your account would no longer settle payments through the private banking networks that had existed for decades. Instead, every single transaction you make would now flow directly through the Federal Reserve. But that wasn't the whole story, because the reason for this monumental shift was something they never mentioned at all. For years, Americans have enjoyed the convenience of instant payments, sending money to a friend with Venmo, paying a local business with Cash App, or transferring funds with Zelle. All of these happen in seconds. So when the Federal Reserve launched its new system, called FedNow, on July the 20th, 2023, the official story was that it was simply modernizing the old, slow system. The legacy system, known as the Automated Clearinghouse, or ACH, processed payments in batches, meaning transfers could sometimes take days to clear, especially over weekends. FedNow, they claimed, was just bringing the government's infrastructure up to speed with the private sector. But this explanation falls apart under the slightest scrutiny. Why would the Federal Reserve spend 4 years and billions of dollars building a system to solve a problem that the private market had already fixed? The speed was never the real goal. The real upgrade was about architecture and control. Before this change, your financial life was a relationship between you and your bank. Now it's a direct line between you and the central government. To understand the scale of what happened, we have to look back in history. In August 1971, President Nixon appeared on television to announce that the United States was temporarily suspending the ability to convert dollars into gold. He reassured the American people that the value of their money would be protected and that for the average person, nothing would change. Their paychecks would still clear and their savings would be safe. It was presented as a technical policy adjustment to stabilize the economy. But in reality, it was a fundamental regime change. The dollar was severed from the discipline of gold and became a pure fiat currency, controlled entirely by the whims of politicians and central bankers. What we saw in 2023 was the exact same playbook, updated for the digital age. A massive foundational change to our financial system was disguised as a minor service improvement. And once again, most of the country was told not to worry, while the very ground beneath their feet was being replaced. The difference this time is that the new foundation gives the government a power they have only ever dreamed of. The true purpose of the FedNow system was never about making your payroll deposit show up a day earlier. The project was first announced back in 2019, long before most people had heard of the economic turmoil of the 2020s. For 4 years, the Federal Reserve quietly built the infrastructure, tested the technology, and onboarded key financial institutions. This wasn't a reaction to a crisis. It was the execution of a long-term plan. The entire system was meticulously designed to be the foundational layer for the next evolution of money, a central bank digital currency, or CBDC. A CBDC is not just a digital dollar like the one in your bank account today. It is programmable money, a form of currency where the government can write rules directly into the code of your money itself. And to make a CBDC work, the central bank needs a direct connection to every citizen's transactions, bypassing the private banking system entirely. That is precisely what FedNow creates. It is the plumbing, the rails, the hidden infrastructure that makes a future of total financial surveillance and control possible. The rollout of this system was just as calculated as its design. On launch day, only 35 banks and credit unions were officially online with FedNow. It seemed like a small, experimental start, but this was the tip of the spear. The strategy relied on what are known as correspondent banks, larger financial institutions that handle payment processing for thousands of smaller local banks. When a major payment processor like Fiserv becomes a FedNow partner, it doesn't just bring one bank into the new system. It brings its entire network. That mention of the MoneyPass network in the Webster bank letter wasn't just a throwaway detail about ATM access. MoneyPass, operated by Fiserv, is one of the key bridges connecting thousands of smaller banks and credit unions to the Federal Reserve's new infrastructure. Your bank might not have chosen to join FedNow directly, but their payment processor did, and that forced them, and you, onto the new government rails. It was a silent, systematic takeover of the financial grid, accomplished through a web of corporate partnerships that completely bypassed public awareness. One of the most alarming features of the new FedNow system is the irrevocability of transactions. When you send money through this new network, the payment is final and permanent the moment it's sent. It cannot be reversed. This is fundamentally different from ACH payments, which could be recalled, or credit card transactions, which have chargeback protections. On the surface, this might seem like a minor technical detail, but its implications for government control are staggering. In a system with no reversal mechanisms, the government has the unprecedented ability to seize funds, freeze accounts, or redirect payments with absolute finality. There is no bank you can call to appeal, no intermediary to challenge the action. 2. If emergency powers are declared, or if an individual or group is deemed a threat, this infrastructure allows for instant, irreversible financial exclusion. It creates a system where access to your own money can be turned off with the flip of a switch, and there is absolutely nothing you can do to get it back. This new infrastructure paves a direct road to a future of programmable money, and the timeline is already laid out. With the FedNow rails established in 2023, the next few years will be focused on expanding adoption until it becomes the default standard for the entire banking system. Around 2026 or 2027, the Federal Reserve will likely announce pilot programs for a CBDC, probably starting with government payments and federal employees. It will be sold to the public as the next logical step, a safer, more efficient digital dollar. But once a full-scale CBDC is launched, the true nature of the system will be revealed. This is money that can be programmed with rules you cannot change. Imagine a world where your money expires if you don't spend it fast enough to stimulate the economy. Imagine trying to buy a plane ticket, only to have the transaction decline because you've exceeded your carbon allowance for the month. Or imagine donating to a political cause the government disapproves of, only to find that your digital wallet is blocked from sending them funds. This isn't a dystopian fantasy. It's the stated potential of programmable currency. And the infrastructure for it is already active in your bank account. And the most sinister part of this entire transition is how your consent was manufactured. By simply not questioning that boring letter, you agreed to it. Buried in the terms and conditions that almost no one read was legal language authorizing your bank to migrate your account to enhanced Federal Reserve services and future digital payment innovations. This vague, corporate-sounding language was the legal trapdoor. It gave them pre-approval for the next phase. When the official CBDC launches, they won't need to ask for your permission again. Your existing FedNow enabled account will simply be converted into a CBDC wallet. They will send you another cheerful letter talking about exciting new features for your digital wallet. But the core change, the move to government-controlled money, will have already been locked in years prior. You won't be choosing to adopt this new system. The letter you threw away in July 2023 made the choice for you. The financial regime was transformed, and your silent acceptance was all the authorization they needed. The system is built. The switch has been flipped. The only question now is, when will they decide to use the power we never knew we gave them?